Hey folks, welcome back. The worksheet method is a method of doing the cash flow statement, and for my classes I'm not going to require it in the principles of financial accounting class. I probably will require it in the intermediate class, because as an accountant, when you go to work, you're going to be dealing with much larger financial statements, and you're probably going to need to do it on a worksheet rather than just in the T accounts on a piece of paper. It's just going to be a little bit easier. So what I've done is I have taken the comparative balance sheet, and I have entered the accounts for year one, and I've entered the accounts for year two. I did do one thing differently than what the book would show, I believe, is anything with a credit account, a balance, is normally listed. They don't list it by liabilities and equity. They list it by accounts with debit balances and accounts with credit balances. And I just left it as a plain old balance sheet just because it's easier for me. Okay, the next thing I'm going to do, we're working with the same general information, the same everything. So I am going to take these journal entries plus the piece for the worksheet right here, and I'm just going to copy it over so it's easier for us to see. Hopefully. We'll see if it works, how well it works. Paste. Let me get the column. Ooh, I don't want it that wide. Get the columns a little bit wider. Get numbers where we can see them. Okay. Whoops. I knew that was going to happen. You see where it has all these reference numbers? It's because I moved it and I put different references in there. We may have to go back over there and see what we need to do, okay? Or I may just fix it as we go. All right. So the first journal entry we recorded, when you're doing that worksheet method, it's still very helpful if you make the journal entries like we did for the T account method. So when you record net income, we debit cash and we credit retained earnings. So instead of going over to the T accounts, what I'm going to do is I still have, okay, I guess I should label these accounts. This is debits. Did I spell that? I did not spell that correctly. ITS, and these are credits. All right, and then the italics are the references for the journal entry number. All right, so I'm going to debit cash for 135 in the operating section. So let's do different color here. What do you say? How about if we make these this pinky color? And that way you can see what we've done. And I'm going to credit the account retained earnings for the 135. And I'm going to find it right there. To record our dividends, I'm going to debit retained earnings for 70. And I will credit cash in the financing section down here for 70. See, it's working just like the other one. We're going to record our depreciation expense. Instead of debiting depreciation expense because it's on the income statement, it did not require the use of cash. So I'm going to add that $24,000 to my cash in my operating section. And I will credit the accumulated depreciation in the accounts. When I pay off some of my bonds, I'm going to debit bonds payable in the accounts. So debit of 50. And I will credit cash in the financing for 50 right there. Whoops, and I didn't get that one pink. Okay, when we record the sale of common stock, we're going to debit cash for 50. And that goes in financing because stock is one way we finance our company. Right there. And I'm going to credit the common stock account up here for 50. Okay, so when we analyzed our land account, to analyze our land account, what happened was we sold some, I believe. So I'm going to debit cash, sold land, $25,000, and the credit is to the land account for $25,000. So you notice how the debits and credits all equal, and we're going to say we took care of that reference. I could just put $25,000 in there and call it good, right? On the equipment, our equipment decreased by $50,000. So that $50,000 goes to the cash because equipment is a long-term asset. It goes in the investing activities. Let's try again. I'm going to debit equipment and it goes to the account. The credit to cash will go to investing. That's much better. All right. Accounts receivable, let's look up here. It increased by $9,000. So I'm going to debit accounts receivable for $9,000. And the offset is always to cash for $9,000 because it's a current asset. What am I doing? I'm crediting cash for my increase in accounts receivable. It goes in the operating section. Inventory is a current account. It looks like the inventory account decreased by $9,000. So I will debit cash in the operating activities for the $9,000 and credit inventory for $9,000 in the accounts. The accounts payable looks like it decreased by $13,000, and so I'm going to debit the account payable in the accounts, and I'm going to credit cash in the operating section right here. Okay, so now we have posted all of our journal entries that we made to help recreate why things changed. And if you'll notice, my cash of $51,000 is not there yet. Alright, so because it is not pink, the total of $486 right here only includes these numbers. So, let's try this again. $435 included all of these credits. All right, I had to think about this for a bit. So what you're going to do is you're going to have a credit of $435, and to show the change in the cash account on the worksheet, what you have to do is you have to put in that $51,000 increase in cash. So when I put the $51,000 increase in cash up here in the cash account, now my total for this column is $486. And to get the totals to match, I have to record the increase in cash as a credit to the statement right here. And now totals in both columns will equal 486. And again, you have your draft cash flow statement right there, and you're ready to go make it look nice and neat and permanent, and you're good to go. So to be honest, this worksheet's not too bad. The trickiest part is putting that cash in. So if you debit it here, you're going to credit there. If cash decreased, you're going to do just the opposite. Everything else, you make your journal entries the posting is much easier, I think, in this worksheet method than it is in the T accounts. It all works the same. And again, everything you do here is simply to do the statement. None of it goes into the accounting records. Okay, I hope that I made the cash flow statement a little bit more clear. That's the best I can do. Okay, you have a good one, and I wish you the very best with your cash flow statements. Bye-bye.